What's good, guys? Today we ended up closing out $108,000 in profits, and I'm going to share with you guys why I ended up taking these trades, what went right, what went wrong, and how you guys can implement this strategy into your trading each and every single day. The first thing I want you to understand is that everything you see here is realized. This means that the position was closed out. This is not taking into account any winners or any losers that I'm currently holding. The only thing that we care about is when we sell, because that is our realized win or our realized loss. You're also going to notice that in the playbook section, anything that says MB plus BX is going to be a day trade, and anything that says BOS, which means break of structure, is going to be a swing trade. Let's start first by taking a look at our swing trades and the ones that we ended up taking profits on today. The first one is going to be DocuSign, which we ended up making a $14,000 profit on, or a 4% return on common shares. You're going to notice we entered this position here on July 5th and ended up closing it out today on the 15th at 11:20 a.m. If we take a look at the chart for DocuSign, you're going to see that we are accumulating because price was sitting within the market bias back here. And normally when price pulls back into the market bias, there's a very good chance that we're going to break out into equal high or higher highs. So far this week, we have broken into higher highs, and my plan was to hopefully take profits, wait for a pullback to 55 or 54, and repurchase again as price is inside of our market bias, looking to ride it back up to 59 or 60 in the next couple of weeks. There's a chance that I ended up getting out of this way too early, which is usually what happens for me. If you're part of the private group, we call it the DiCarlo effect, but I'm super happy with taking my profits and putting the capital elsewhere. Another swing trade we closed today were our Tesla December $225 calls. I'm still very bullish on Tesla in the long term. Over the next week or so into earnings, I do think it's going to pull back to $220, but I decided to take my profits today because I felt that my strike price was getting way too far from where the current stock price is, which is good from a theta decay perspective, but it's not good for volume and liquidity. I would rather take the profit and reopen another call with a strike price that is closer to the money, which is what I did. I closed out these December calls and I opened up more December calls. This time, I only went with 10 of them, which is about a $42,000 position, which is about 20 to 25% of the full position that I really want here. So even though I'm bullish, I'm not in aggressively. I ended up going with December 20th, $260 calls. And so if Tesla can pull back down into that 220, 230 range before earnings, I will definitely be adding to that position. The next position that we closed was Workday. This was another swing trade, which was 5.62% on common shares. This was a $330,000 position. So I know that for some of you, you might be like, dude, yeah, you made 18 grand, but that was on 330,000. What you have to be focusing on is your net ROI. Even if you only have a $10,000 position, a nice 5.62% return in just a couple of days is more than enough. You don't want to be sitting here having unrealistic expectations of the market. You're going to see that we entered this 14 days ago on July 1st when price was at $220.47, and I closed this out today on 7/15 at 10:11 a.m. Workday, much like a lot of the trades I closed today, I think will probably continue to run. You can see that we were accumulating when price was within the market bias. From there, we ended up seeing price pull back into market bias, push up into an equal high, and I still think that maybe we could see a move to 235, 237, or 240. But I do believe that at some point within this range, we are going to reject, and I will look to go long again, anywhere between $227 and $225 over the next month. And then the final swing trade that we ended up closing for a profit was calls on Caterpillar. This was a $73,000 position, and we ended up making a 26% return on our contracts. We entered this back on 6/28, so we've been holding this for over 2.5 weeks now, and we ended up closing this today at 7:15, 10:12 a.m. And I definitely closed this early, but it has the same exact setup as everything else. This time we actually have what's called a bullish flag. So what I'm expecting here and why I closed the trade is that now we've pushed through this resistance level. We could probably move to 352, 356 max, but at some point we should pull back to catch this market bias again. So I think that Caterpillar will pull back to 336. I will look to enter probably before earnings, and then we will play that massive breakout into the end of August. If you're looking to learn this two-step trading strategy that I'm showing you here with all of these swing trades, we have a course that is completely free going over exactly how I use this indicator, my custom settings, where to set your stop losses, take profits, and how to use appropriate risk. The link to that and all of our courses will be in the description. All right, so now let's move over to the day trades. Today, I ended up taking a position in Qualcomm. This was a day trade. We closed for a $16,000 profit. Carvana for a $22,000 profit. We're going to go over both of those in detail now. And then also AMD for a small loss of about $5,263. I also have these calls for $719, $245 on Apple, but those I ended up swinging overnight. So if we end up losing money on that, that will be a part of tomorrow's profit and loss. And if we end up making money on it, that will be part of tomorrow's profit and loss. We're going to start first by looking at Qualcomm. So this was a $49,000 position. The net ROI was 33%. And we ended up taking this position within our Discord community because we saw unusual buying happening. I alerted the team at 10:23 a.m. that we saw some unusual July $215 calls come through and that I was going to follow this. At about 10:20 a.m., price was pushing up on the 15-minute chart into equal highs. And so I knew that while we didn't have a lot on the table, I thought that we would have enough follow through to push into our higher highs. So I decided to enter the trade and monitor the BX trender. Once we came up and we tapped that resistance level, I decided to take my profits and close out for a good trade. I knew that there was potential that we could see Qualcomm continue to run to 210 or 211, but I thought that for the amount that I was up, about 30 something percent in an hour and a half, that it was better for me to walk away from the trade and take the profit. Moving on to the next position, which was a much better trade, being Carvana. Now, this was a 28% return, and the reason that we ended up taking this trade was the same reason for taking Qualcomm. At 9:42 in the morning, we saw rapid fire bullish flow come through. If you want to learn how to follow hedge funds in real time, we have a course going over how I read and trade with unusual options activity, which is exactly what happened here on Carvana. We had an unusual rapid fire bullish flow come through at 9:42 a.m. and I ended up alerting the Discord community that I was going to buy some calls. I tried to fill with 450 contracts and I was unable to fill all at once, so I ended up moving my price around and ended up filling both right around 9:48. At this point, price was pushing up into that 141 range, and I knew that we were going to see a continuation into higher highs, most likely up to $144. And if we move down into the 15-minute time frame, you're going to notice that this is right when price started to look more weak because we had this BX trender getting lower, and then we also had the market bias no longer in expansion mode, which was another good reason for me to go ahead and take my profits. Now let's talk about a position that is not going well, which is Apple. I ended up purchasing calls this morning for $719, $245. My reason for this was we saw bullish activity as soon as the market opened here, indicated on the right side of your screen. At 11:30 a.m., we also had an alpha gold alert, which is one of the strongest bullish alerts that we have around. And we teach this as well within our free unusual options course. Now, the first 15 minutes of market open, if you were to draw the low and the high of any ticker, this is going to be called your open range break or your 15-minute orb. And basically what we're looking to do is accumulate shares at the bottom of that 15-minute orb and hopefully ride them back up to the top of the 15-minute orb and maybe even break through. That was what I was expecting at this point with Apple. And we knew that because there was actual real-time buying coming through, I thought that we'd see more of a follow through on Apple. And instead, we ended up just being range bound for the entire day, holding between this 15-minute open range. And it's because we ended up holding this 15-minute open range and the fact that the daily chart is showing a higher high on the BX trender that I decided I was going to swing the trade overnight. And so we'll see how this plays out into tomorrow. I hope that this video helped, guys. If you want to get access to any of our courses that are completely free, the link is going to be in the description to all of them. And if you want to join my private academy to get access to all of my trades in real time, our swing trades, which you only need to be watching the market for the last 30 minutes of the day. 90% of our traders have full-time jobs, so we're not worried about watching the screens all day. But if you are a day trader, I do give out all of my day trades in real time over there. Thanks for all the support. I'll see you guys next time.